Alright guys, GenZ Reishirou here, and today we have a massive portfolio update video because I'm going to be going over my strategy with investing. If you've seen my videos before, you're going to be like, what happened? Like, this is a big left turn. Everyone knows I've been investing $200 per week into the Robinhood portfolio, but within the next 2 weeks, we might be putting in $40,000 to $50,000 hard cash into this account. $17,000 is here already, so about $20,000 more is going to be moving into it. Pretty much, I've been saving to invest into real estate, and we got that money. But essentially, if I have $200,000, for example, in the savings account, and plans have changed, and now we're looking at a house that I'll need to put in $150,000. That means I'm gonna have $50,000 not doing anything. It's in the savings account for no reason, instead of being inside the market and making money. So that's where this $47,000 to $50,000 is coming from, because it was earning a 4% yield in my bank account. So we're just going to invest it into the market. Essentially, you guys know I invest into safe stocks, realty income, dividend investing, SCHD, 100 shares. So these are the core holdings in this portfolio before you guys see all of these shares from YieldMax. I was reading up on Reddit, on the dividend Reddit, and YieldMax came up. I didn't know what it was, so I looked into it. And after 5 days of researching, like literally, it was so interesting that I was up all night on Friday night, Saturday night, even Sunday night, just reading through the Reddit, reading through Twitter, and reading up on YieldMax. And here we are. Now we're going to be throwing upwards of $40,000. If you ask why I have one share of a bunch of them, and it's pretty much so when I open up my account, it's all there and I can see everything. And pretty much, my conclusion from days of research, also XDTE, it's a higher yielding dividend stock. It's even higher than JEPQ, and we're going to be putting a good amount of money into this eventually. YieldMax is basically an options ETF, and the problem with options ETFs is they tend to have their net asset value erode, or pretty much the share price goes down. But if you see this where it goes down but it goes up, or it stays flatline over time, then this is very good, because you're not exactly investing into this for the price appreciation, but you're investing into it for the dividend, which is, if I can find it right here, it's a 16% dividend according to Seeking Alpha. So obviously this beats JEPQ, because JEPQ is at $8.66. I've been looking at a lot of their shares, and if you guys aren't aware, with YieldMax, these are all their ETFs basically, right? Like AMD, they do options on AMD. Connie, they do options on Coinbase stock. And these are extremely high yielding, stocks. Right here, that's Meta, so 24%. If you look at Tesla, which tracks Tesla, and if you guys can see, 104% distribution rate. And I know you guys know the saying, 2 to 8% on a dividend yield is safe, and anything higher than that, people consider it's a dividend trap and very dangerous, and pretty much you're probably going to lose your money on that. But YieldMax might be different. Now, not everything is, going to be good. YieldTY is controversial. A lot of people hate it and a lot of people like it. Distribution rate 105%. That's like getting a 105% dividend. But the problem is, if you look at the chart, if I can find it, YieldTY, and pretty much, $20 a share a year ago, and we're at $10 a share. So it's down 50% on the year. Now, this one's controversial because it was using a certain strategy from here to about here, and pretty much they changed up their strategy, and the price started stabilizing at this $10 to $11 mark, which I told you guys earlier. If they manage to keep the dividend and keep the share price flat, which for the last couple months it has been keeping flat, then you're making a lot of profit basically, because even though the price will drop, in the last 3 months, maybe 2 to 3%, for example, if the dividend's paying out 90% on the year and it stays flat for the whole year, obviously you're making a lot of money, right? So this isn't like your SCHD where you can buy and hold it and you don't got to do anything to it. You need to be strategic with something like YieldMax and high dividend yielding companies and stocks. You don't want to time the market, but obviously if you bought in right here, you are kind of screwed. But if you bought in right here, and also because they changed their strategy, then this might be opportunity. But we're not here to talk about ULTI. Pretty much, YieldMax is what I'm very interested in, and I've never seen something like this before because, for one, it pays a weekly dividend, which means if I reinvest it weekly, it's gonna compound really fast. It says the yield is 37%, but if you go to the website, it says the distribution rate is 66%. So I'm gonna go with the website right here, and pretty much they have been stabilizing their price. If you look at the chart, then it's kind of choppy, but over the last 1 year, it felt like something like it fell something like 6%, which sounds bad, 6%, but again, this is considered good because over a 1 year span, it fell 6%. But if you go down 6% in price, but you paid out 66% in distributions, then obviously you're making a lot of money, right? Again, it might not be a buy and hold forever, but if you're just slightly strategic with what you do with it, you can make a lot of money. And that's why I am getting interested in YieldMax. It pays weekly and there's price stability. We look at the 6 months, for example, down 10% from 20 to 1850. But look, guys, from August until now, it's been flat, and this is really good. If you bought right here, the price didn't fluctuate on you at all, and you got paid this really high dividend up here, 66%. If you guys made it this far, then thank you for watching, and hopefully you guys subscribe and stay tuned for the next video as you follow my financial journey.